From your perspective, how has the economy performed this year, and what stocks stood out to you?
Right. So for this year, for the most part, the economy was performing fairly well, and there were still some remnants of the COVID recovery working its way through the economy in the earlier portion of the year. Now, some of that has kind of been upended with passage of Hurricane Beryl, and it's estimated at about 32.2 billion in total losses, 15.9 billion of which is infrastructure losses, 7 billion of lost productivity. So that's going to take a little while to work its way through the economy before things kind of really normalize from that. Against that backdrop, we saw where the PIOJ is forecasting a negative 1.5 to flat as it relates to economic growth leading into the end of the fiscal year, which is March 2025. Now, what this means on the market is that yes, there is some scope for recovery in the near term. However, it's likely to be not an even recovery. It's likely to be disjointed, right? Now, there are a number of companies on the market that I think present a good value where they are, regardless of if there is a substantial growth driver that they face in the immediate term, just because of the poor sentiment in the market. Now, if we look at the financial side of the market, we have a shift by the BOJ to a more easy stance on monetary policy, more accommodative for the most part over the last few years. Monetary policy has been quite tight, and it's been quite a negative overhang for the industry, and the BOJ has shifted their policy stance now. The industry generally is likely to benefit from that, but there are a few key names that I think stand out from a risk reward standpoint. I think Scotia is one of them, Scotia Group. I think where their price now is very good from a risk reward standpoint. National Commercial Bank, I think, is also a very good risk reward where they are now, especially given their dominant position in the market, and the runway that they have with regard to
the challenges that they've had the past 2 years. NCB.
Sorry, repeat that.
I said, despite the challenges that NCB has had the past 2 years.
Well, we see where they've made progress towards working through those challenges. Their operating efficiency has improved, and they've committed to improving it further. They're targeting more improvement in operating efficiency leading into the 2026 financial year, targeting a return on equity in the high teens leading into the 2026 financial year. And I mean, they've been there before. Monetary backdrop is positive, while the near-term growth impact is likely to be somewhat subdued relative to the rest of the Jamaican economy. I think the medium-term outlook is still fairly stable. So in general, I think the near term is a bit cloudy, but the medium-term outlook is still fairly solid with I would suppose some risk skew to the downside that we should be aware of.
Before you move on, Darren, I want to hear Clive's opinion on NCB, because yes, they have made changes, but it hasn't reflected in the stock price. Investors still seem to not be happy with NCB. What's your outlook for that particular stock, Clive?
Yes, he's quite correct. We have said this for the longest while that NCB is quite resilient, and they're seeking should I say, they have improved their balance sheet. They have if the efficiency ratio is quite concerning. I think Mr. Leachin spoke to it in an article just recently, just recently. I think it was 2 days ago, where he spoke to the level of stability of the company. It is concerning how it trades on the market. the spread, the bid ask spread is fairly wide. Bid ask spread meaning what people are willing to buy at and what people are willing to sell at. People are still a bit skittish, if that's a word to use. People are carefully coming into the market and testing the market. So we see it ebb and flow. I think 2 weeks ago, the market, on average, each of the indices were up probably about between 1.5 to nearly 4 percentage points. And then last week they were down substantially. So we see that ebb and flow. Speculators, cautious investors. As to how the stock price has played itself out, seeing the market, seeing the transactions going through, I can tell you that I believe that, how should I put this? The market is quite thin and it can be influenced by players, different particular participants in the market, right? And I think that once these sellers are out of the market, then I expect the stock price to move up, right? And if you look at that article by Mr. Leach, and it was today's Tuesday, I think that was in the Sunday's paper, right? 2 articles in the Gleaner and in the Observer. It spoke to a few entities are selling in the market and the volume that they are pushing in the market, and that they are weighing the price down. If these 2 particular sellers should exit the market, then I expect the stock price, because there is resilience. And I've noticed that each time the price goes down, the retail buyers, I would say, pull the prices back up, right? So I think there's a strong fear demand, I should say, that is a potential demand that can pull the price up. I would not be concerned about the price we see on quite a few of the financial stocks, particularly that stock NCB. I would not be too concerned now. It's an opportunity for the dollar cost average in buying. That is what it presents now. As I said, and I spoke to the macro side of the economy, the monetary policy, the fiscal is quite stable. That these give a good floor, provide a good support to the market, to the equity, to the stock market in particular, the broader economy. So I think that there's a level of optimism, going into the future, particularly on financial stocks.
Let me bring Darren back, because he seems to agree with you, since the 2 examples he's given so far are financial stocks, which have lagged in the past couple of years. So Darren, you mentioned Scotia, you mentioned NCB. What else do you have your eye on?
Yeah. So so in thinking about it generally, it's also important to think about what are the key driving factors of the companies on the market, and what are the developments out there that are likely to positively or negatively impact those businesses, right? And also to look out for businesses that have a potential growth catalyst outside of Jamaica. So, for example, Jamaica Broilers is a company that we really like. It has a tremendous growth opportunity from its U.S. operations, and it's benefited quite well from the discontinuation of the Haiti operation. It's really lent to an increase in operating efficiency for the company overall. And one of the things to think about with a company like that is, with the new administration coming in the U.S. and the commitment to deregulation and tariffs and all of these things, what it might mean for the company. When we think about the prospect for deregulation, environmental regulation is one of the key areas that's kind of under the microscope right now by the incoming Trump administration. And it's possible that the Jamaica Broilers may face some benefit from that. It may make it easier to expand their operation, expedite transactions that they might be doing in that market in the future, create opportunities for the business. It's hard to nail it down to one thing, but it is a positive development for them, right? When we look at companies that export products, when we look at, for example, Wisynco, which their export operation is small relative to their overall business, but growing quite well, quite rapidly over the last few years. We have to assess, well, are they really going to put in tariffs across the board? What does this mean for Wisynco and other exporters? Will it have a large impact? For Wisynco in particular, given the scale of their operation, it's not likely to be a major impact. And that's another stock we're quite bullish on as well. Grace Kennedy is also extremely well priced at these levels as well. It's again a very dominant player in the local market. They serve the diaspora well overseas. So it's really about, well, yes, the sentiment in the market is bad. Liquidity is not, running down prices quite heavily in the market right now. But we have to ask ourselves, are we going to trade the liquidity, or are we going to invest in the value? And I think for long-term equity investors, now is a good time to pick up some very good value on the market.
Good points.